Welcome to today's first-time homebuyer seminar. Again, sir, we're starting a bit late. We had a glitch with the passcode for the Zoom technology. Anyway, one of the reasons I decided to do the first-time homebuyer seminar is to help clients because a lot of clients do not know they can buy or they don't understand the steps to buy. Last year, I had three clients referred to me who came with the notion of buying probably in 12 to 24 months. Surprisingly, they were in their homes within 90 days of having their first appointment with me. One actually was in their home 30 days after their first appointment with me. That just showed me that a lot of people are able to buy. They just don't understand the steps and how to go about it. That's the reason I decided to focus on first-time home buyers, especially this year, and help people understand the process and how seamless it can be. The Just a second. The topics we're going to cover today will be home buyer sentiment, historical perspective, the state of the economy, affordability, how to build wealth by home ownership, the home buying process itself, and overview of the different loan programs that are available to you. And most importantly, how to access government grants and funds out there that can make you buy with very little money or no money at all. Today, before I proceed with me, I have one of the best in the industry today with me, Jay Richardson from Potomac Mortgage. Welcome, Jay.
Thanks for having me, Emerica. Happy to
Good.
help.
Thank you. I'm going to go over a few of those topics, then I'll hand over to Jay, who is the expert in getting the financing for you to be able to buy your property. The home buyer sentiments, 15% of Americans plan to buy a home within the next 12 months, but only 28% of those who planned to buy in 2024 actually succeeded in buying. There are different barriers to buying. One of those is 35% of non-homeowners cite high cost of living. The affordability is a big thing for people. Market sentiment also is one. The buying behavior is one. And a lot of people say we're waiting for better conditions. Well, high uncertainty persists. 60% of buyers aren't sure if this is a good time to buy. Every time I talk to someone, they have an issue thinking, okay, is this the right time? Is the market going to crash? So much going on. One of the key factors for people is interest rates. But as we can see from the slide, we went as far as 1970. From this, we can see that we are at one of the lowest points of interest rates. Other than the COVID era, which we've never seen before and might never see again in this lifetime, you can see interest rates going all the way up to 17.5%. So right now, I would say we are in a good place with current interest rates. Jay would tell us what the current interest rates look like right now.
Sure. Yeah, thanks. Now that I can see the document here, as you were saying, if you look all the way over to the left, way back in the 80s, you could see interest rates were over 17%.
Mhm.
Not that we've ever seen those interest rates since, but just a good perspective of 20 to 40 years, you can kind of see that we are sort of in the lower range. So
Mhm.
when people ask us, interest rates are high, it's hard to uh, tell people, yes, interest rates are high, because it's always compared to what? Compared to 2019 and 2020 when COVID was happening and interest rates were, 2%, 3%. Yeah, they're higher then, but that was the exception.
Yeah, exactly. And I don't know, but I don't see us having those anytime soon.
Right.
Um, for 2026, the Consumer Price Index, national home values are forecasted to increase within 1 to 4% compared to 2025. So it's saying if you buy a home today, it's supposed to appreciate up to 4% within the next year. Home value predictions, most times it's the prices are determined by inventory rates, demand for housing, and what's going on in the market. The the data shows that about 3.3 million household formations will happen within the next 10 years. With this in mind, buyer demand may double over the next 10 years. A new construction, as we see it, might be on the decline. So that's even more reason for people to look into buying homes sooner than later, because the population growth would also tighten the inventory, which would lead to home prices going up, which for homeowners would be a good thing because their properties would be appreciating.
Yeah, you have the boomer generation, Generation X, millennials, and Z. If you look at the number of people that were born in the previous generations, there's a lot more people that have been born in the latest two generations that are coming up, and they're all starting to come into their home buying, the peak home buying period.
Yes.
So that when you were saying the home builders, there's not as many homes being built, so it's really hard to comprehend the amount of people that are coming into the marketplace to buy a home, knowing that they haven't been able to keep up with the demand in prior years, and there's a whole lot more people coming. So when
Mhm.
people ask me, that's like a really good document to just confirm that house prices probably are not going to go down. So the sooner you can buy, the better off you're going to be. And there may be some flat periods, or I don't think there's going to be any down periods. I think if it says 1 to 4%, we're probably going to be closer to 4% than 1%
I agree with you. Especially in this area.
in general.
All right, real estate commissions. Normally, the home seller and the selling agent would agree to a commission for both the buyer's agent and the selling agent. The commission cost can be negotiated. It's never fixed, and the seller can choose to include to pay the buyer's commission or not to pay. The buyer is responsible to pay their commission, but most times the listing agent would negotiate this, and your buyer's agent can also negotiate this into the contract to save you, the buyer, from paying it and have the seller pay for it. Um, the services for the buyers normally also is defined from the buyer's agent. We find the properties, we schedule the tours, we negotiate with sellers, agents for you, do the paperwork, introduce you to the loan officer, meet with the lenders and title company, and the whole works, basically making the process as seamless for you as possible. The next slide is how homeownership builds wealth. This for me is one of the key to doing this seminar for you all, is to show how to grow generational wealth and build wealth for you and for your family. As this slide shows, home ownership builds wealth. Let's take, for example, if you purchase a home at 600,000 and we use the conservative 4%. We've seen it go much higher than 4%, but we'll stick with 4%. At 600,000 at 4%, you're $24,000 a year. 10 years later, you've accumulated $240,000 for yourself and for your family. The value for the same property in 10 years is 840,000. You can sell that and take your equity out. You can refinance. You can do a HELOC loan. There's so much you can do with this extra cash. While if you were paying rent, basically all the money you've paid in 10 years would have gone down the drain. This is one of the things I'm passionate about, which is why I keep working with first-time home buyers to show them how they can build generational wealth.
And I want to also add to that, that's just appreciation.
Yes.
When you make a monthly payment, you're forced to make a principal reduction. So that doesn't even account for your loan balance going down over time. So that's just you guys have when you own a home, you've done nothing but own a home, and then the house, the equity is just increasing. I mean, you're going to put money into it to fix things, those types of things. But really, you just have an asset that just continues to grow over time. So. Yeah, I love that slide.
Exactly. Yeah. And
When we talk about the
then
home buying
the home
steps.
buying process, yes.
Okay, like Emerica was saying that, one of the early steps in the process is a conversation with somebody like me who can answer your questions about um, all the questions that you're going to have. So we'll go through those questions together. But you're going to want to know how much down payment you need. You're going to want to know how to go through the application process and how to give us your verifications. So this kind of just lays it all out. So the pre-approval part is me asking you some questions just to determine the basics on whether you qualify, um, whether you have the minimum qualifications. Once we kind of get through that step, you go through an application process. We review your credit and we review your income. Once you to that point, you can go through the home search process, and that's when we kind of know what your budget's going to be. You know how much of a house that you want to purchase. You know how much your monthly payments are going to be with certain house prices, and then you go under contract, and then you can kind of see these steps as you go along here. You've negotiated certain things with the seller. You give a deposit, and a deposit is something that you give to the seller saying, "Look, I really want to buy this home, and so um, I'm giving this amount of money, $2,000 or $3,000, to the title company to hold in
Mhm.
good faith that we're going to buy this house." And then as you go through these steps, these are more of what we do on the lending side. There's a set of loan disclosures that you review. We go through all that stuff with you. You do an
Yeah.
appraisal, underwriting, and the final loan steps. So you've got pre-approval up here as the first step, and you've got final loan approval after a few extra steps. And then you go to
Yes.
close. Go ahead.
No, go ahead. No, no, go ahead. Go ahead. Sorry.
Yeah. And then
Mhm.
you go to a title company and that's a third party that's reviewing all the legal parts of the home. So you've got the deed of trust, you've got pieces of information that make sure that you own that property and it gets executed at the county that you go through. The title company also handles all the money. So we give the title company the money and then they disperse it out to different people. And then, of course, you're going to owe a mortgage. And then we set up monthly payments for you to start typically 30 to 45 days after settlement.
hmm Thanks, Jay. That was very detailed. One of the part I wanted to bring in is the pre-approval. For most of you that have reached out to me in reference to buying a home, I always insist in getting the pre-approval first because that gives us the roadmap to what you're going to buy, what you can afford, because we want to make sure whatever you get is a home you can afford and you can keep over the years. So the pre-approval is the key. And to get pre-approved is when I'll send you to Jay to work with, and he'll go over the next steps with you now to see how Potomac Bank works, what you need to do. He'll also go over the different loan programs available to you out there. So take it over, Jay.
Will do. Okay, so you can see on the left-hand side of that, the application process, which is what people start to feel a little intimidated by at the very beginning.
Mhm.
It's like any other medical application or any kind of application that you do online. You're basically giving us your personal information so that we can pull your credit, and you're answering questions, your financial questions like where you work, how much money you make, and your bank statements. All that can be done online. And so there's quick links and you can start the application, you can stop it, you can finish it. I won't see it until you hit submit. So you can play around with the application. We have people that I can send the link to you in an email and you can finish the application within a few hours.
Mhm.
And honestly, the approval process can be a couple hours after that. So it doesn't have to take weeks and months because the computer gives us a lot of initial information. There are humans behind a lot of this, but there's also a lot of automation. And we use automation to tell you with confidence that there's going to be a loan program out there for you. Now, speaking of loan programs, after we've assessed your financial profile, there's different loan programs to help you and can be suggested based on your financial profile. So on the right-hand side, and I don't know if we stay on this page or the next one, it doesn't matter. But on the right-hand side, yeah, let's stay on this one. I thought
This
this,
one.
yeah,
Okay.
yeah. Um, on the left-hand side, it breaks down the name of the loan programs. And
Mm.
then it kind of tells you in the middle section how maybe these are a little bit different and um, who these programs are best for. I can tell you that the majority of the loans are in that first category, conventional. And conventional just, it really means that there's a bank or a financial institution that's offering most of these are like 30-year fixed mortgages. So you've got a fixed rate for 30 years, and the terms are either 3% down, 5% down, 10% down, 15 or 20% down. So you have a variety of down payment options with that first um, loan program.
Okay.
And the second loan program is similar. It's th only 3.5% down, but you can put 5% down. And that loan program just has different flexibilities for different types of clients. So we use the second loan program, the FHA loan program. It's better if you have lower credit scores. So the conventional loan program at the very top, they give discounts for people that have higher credit scores. Where FHA, they don't give you discounts, so you can have a very similar credit score. So credit scores are typically from the low 600s up to 800. So you can have a low 600 credit score and get the same interest rate as somebody that has a 700 credit score. All right, that's why we use that. Also, it's very flexible if somebody is self-employed, like they allow you to have um, less income because if you are self-employed, you can write off a lot of expenses to keep your taxable income down. And so we know that, and we know that if you've done it that way, even though it doesn't look like maybe you can afford it, this loan program again helps people with that situation.
Okay.
Also, it's a little more forgiving for somebody that has a collection account. So, like medical collections and cell phone collections used to be like something we saw in the credit reports all the time. If you have those and you could never get them resolved, instead of waiting months or years for those things to come off your credit report, FHA allows that.
Okay.
USDA is similar. FHA, USDA, and VA are all government-backed loans. So they're loan programs that are secured through government agencies. And that's the reason why you don't get extra charges. It's because the government is backing those loan programs.
Mm-hmm.
And they're meant for people that have prefer to have a low down payment. USDA, unless you're going to buy out in the country, um, that's a loan program that I've only done a few in my 23-year
Okay.
career, but it's zero down. So that's the nice thing about it, but you have to be in certain zip codes. And trust me,
Mm.
it's pretty far away from Washington, D.C. area.
Okay.
VA is for the military folks. So if you are in the military, you can qualify for a VA loan. And jumbo loans are for higher priced properties.
So for first-time home buyers, most will be within the conventional and FHA brackets, right?
Correct.
Okay.
Correct.
Okay.
And I talked about a lot of that on the left-hand
Mm-hmm.
side and the right-hand side. What I didn't talk about, which we do get a lot of questions about private mortgage insurance.
Mm-hmm.
What's really, really important, and I know, Emerica, you want me to talk about uh, down payment assistance
Mm-hmm.
and low down payments, because that's
Yes.
what first-time home buyers are usually looking for. The
Mm-hmm.
barrier to try to buy a home is have saved money. Uh,
Yes.
and we know that. So um, typically, I think you need to have around 1% or 2% or 3% of the sales price saved. To me, that's a somebody who's ready to buy. And the reason why I say that is because you can qualify for a loan that has down payment assistance. So that's
Mhm.
essentially zero down,
Mhm.
but you still need to assume that you need money for closing cost. And
Mhm.
Marika, I don't know if you want to talk about sometimes sellers, you can negotiate that, but it really depends on the market conditions to try to
Yes.
get closing cost money from the seller. Do you want to talk about that
Mhm.
a little bit?
Yeah, sure. Um, like you say, it's good. It's a good start to start with at least 1 or 2 or 3% saved. If you can do that, that's great. But for people who can't do that, one of the things we can do is negotiate with the seller to have them pay some of your closing costs. And depending on the market, most times the sellers would agree. Another way to do it is to increase the price and then have the seller have the funds from that to use as a down payment or closing cost. So there are different ways to do it. That's why the initial consultation with a good agent and a good loan officer, or I should say experienced agent and an experienced loan officer, we can sit with you and tailor around what your needs are, how much money you have saved, how much money you have to put into the home, and then walk a pathway for you going forward. I've had clients who've bought with no money down, and I've had clients who've bought homes with as little as five or $10,000 down.
Yeah. And I think this is important to know. So, um, the reason why analyzing your financial profile is important is if you have to wait to buy a home or get down
Mhm.
payment assistance, sometimes we're going to tell you just to get down payment assistance. But the
Mhm.
downside of getting down payment assistance is you typically have higher costs somewhere else associated with it.
Mhm.
It could
Yeah.
be an interest rate or it could be PMI.
Yes.
And most of the down payment assistance programs don't go to people that make a lot of money. And it is hard to buy a home in the local area and qualify for a more expensive home and get down payment assistance. So that's like one of the tricky spots. I would say, I don't know, Emerica, 500,000 price point and below. Is that sort of where you see the down payment assistance, or do you see it in the
Yes.
different areas?
Yeah, say about 500,000 and below, especially since most properties in the area, that's the price ranges. It starts between 4 to 500. So
Yeah.
yeah, that's where would see that.
Yeah. And I've had other people that have had, they have money saved and they say, "Hey, I want down payment assistance." And then I show, "Here's your payment if you don't take down payment assistance and the interest rates,
Mm.
and here's your payment by taking the down payment assistance." And
Yeah,
again, it's not free necessarily, only because there's a cost somewhere. But again, if you're having to wait another year to buy a home, I still think it's better to take the little bit higher cost loan today, get your 4% appreciation on the house, because
exactly.
there's something called a refinance.
Yeah,
Your loan that you get when you buy the home and the interest rate and the program is probably not going to be your loan that you're going to have forever. That's what most people don't understand.
yeah.
Most times you can lower your payment the longer you live in your home.
That's right, Jay. I know we're gonna have questions at the end, but just on this page that we have, I see it says credit score requirements, minimum 620. I know a lot of people, one of the hindrances for them to buy a home is their credit score. So what should that be? And what's a good score, or at least where's a score they can enter the market with?
Yeah. There's loan programs that go 580, but
Okay.
they're more expensive. And if
Okay.
somebody, so Enrico, if we talked with somebody that's on this call now, and
Mm-hmm.
they have a 580 credit score, they're monitoring their own, they have Credit Karma, and they kind of can, I would say the very first step would be to analyze their credit and figure
Mm-hmm.
out where the issues are and see if it's something that can be addressed. And then their credit scores potentially within 30 or 60 days could go up a lot higher than where they are now. That
Yeah.
happens. If it's more complicated, we do have professionals. I have a professional that I work with that they work with the credit agencies. They work with creditors that are reporting something that maybe is in error. And sometimes there's things in your credit report that just can be fixed. But again, don't
Yeah.
feel like it's something that you have to wait forever because I've seen them where credit scores could jump up 50 points or 100 points just in 60 days.
Jay, you and I had a client like that about 3 years ago. And she did it herself with no credit
Yeah.
doctor or anything. She raised her credit score in about 60 to 90 days over 100 points. I don't know if you recall. And she did it all by herself because she was ready to go.
And I think the way that started, and correct me if I'm wrong, we looked
Mhm.
at her credit report
Yeah.
and I made some suggestions on what to do, pay down a
Mm-hmm.
credit card here,
Mm-hmm.
pay this part off. And she did those things. And within, like you said, a short period of time, the scores went way up. So yeah,
Yeah.
you don't have to pay
That's
for it necessarily, but sometimes
mhm.
it does require
Sometimes you do.
upfront.
Yeah. That's That's good. Okay. Most of the FHA overview, you've gone over most of these. Yeah,
Yep.
the 580 score. Another thing I see here that might be concern gift funds. What are gift funds and how can we use gift funds?
Yeah. Yeah. So almost every loan program allows gift funds. And a
Okay.
gift fund is defined as somebody, a donor who's willing to, on a document, say that they're giving you money to help you purchase a home.
Okay.
Okay. So the when I bought my first home, I like to tell the story. I got gift funds from my wife's grandmother. And
Lucky you.
yeah, lucky me. Now our agreement was we were going to pay her back. But
Okay.
we all had to sign a document. She had to sign it. We had to sign it that said this money is not to be paid back to the donor.
Yeah.
So, so
Yeah.
you kind of have to know that because it's a conversation
Hmm.
that you have to have with the donor. But it's
Hmm.
just nice to know that, I mean, we've had bosses. I've had somebody that their boss was willing to give them their own funds to help somebody buy a home.
Hmm.
So the donors can be pretty flexible. A lot of times you want it to be a blood relative because, like FHA, for an example, requires the donor to be somebody that's related to you.
Yeah.
All right.
Okay.
But yeah,
All right.
yeah. And there's no limit
So
to that. So
there's no limits. Okay,
yeah,
good. And this can be used towards down payment, closing costs, or anything, right?
correct.
Okay.
Yeah,
The next slide is VA. I know VA, it's also for retired, it's for veterans, right? Not necessarily active duty.
correct. If somebody was in the military and they served for pretty much any amount of time,
Mm-hmm.
they should have a real estate benefit. And the real estate benefit means that they can purchase a home, a primary home, can't be an investment property,
Mm-hmm.
that they're going to live in with no money down.
Okay. Okay. And it's amazing how many veterans I know that don't actually take advantage of that.
Yeah.
Um, Before I move on to mortgage do's and don'ts, I know a question someone asked me actually just today. They're buying a home with FHA, which means it would be their primary residence, but they're not sure if later in the year their job might transfer them. And she was worried that, oh, this could be, she used the word mortgage fraud. And I'm like, that's not mortgage fraud. So can
Yeah.
you explain the terms, even though if it's a primary residence and you do have to move, life happens?
Yeah. Yeah. It would be really hard to accuse somebody of mortgage fraud. The the mortgage fraud comes into play when there's evidence that you had another property or you were never planning to move into the property that you purchased.
Mhm.
So like I have had people, military mostly, but I've had other people where they moved into a home and they moved into a townhouse and the next door neighbor smoked so much marijuana that it was leaking through the walls of the house, and so they couldn't live there any longer. So literally they rented the place out or sold it. I don't know what they did, but they did move to a different residence and bought a property, another property. So um, you know,
So you're not tied to a home
you're
because
not
you
tied
bought
to
it
it.
as a
If
residence.
life happens, then you can move out of the property. Yep.
Okay. The next one is going to be mortgage do's and don'ts, and I'll go over these real quick. When you're ready to buy or ready to get your mortgage, it's good to, keep all your originals and be able to access your bank documents, your employer documents, your pay stubs, and all. So, all in important financial documents, so you can use this for your loan application. You should be able to provide your earnest money deposit from your own funds. So yes, you're gonna get gift funds, but it's good for it to come from your bank account directly for your earnest money deposit. This is the funds you'll put down when you're writing a contract to buy the property before you even go to closing. If you're receiving any huge amount of money or anything, you're supposed to notify your loan officer to make sure it's okay. So basically, you have to track your bank accounts to make sure there's nothing questionable that might hinder getting your loan. Um, Provide your honest money deposit from your own personal bank or your bank account or gift fund. The do's are simple. The don'ts for me is what, and I get to see this all the time. I actually even had one recently. Don't close or open any assets or transfer funds between accounts without talking to your loan officer. So don't go opening a new credit card. Don't deposit huge sums of money into your bank account while you're in the process of buying a home. Do not change jobs or change employers, as this might affect your loan altogether. And the most important one, don't make major purchases during this period. I've had clients on the contract who goes and buy a new car, buy new furniture, getting ready for the new house. That's the biggest no-no when you're buying a house, because with this, you will not be able to qualify for your loan. And lastly, don't open any new credit cards or increase or credit lines or get any loans until you've closed on your property, because any of these don'ts could hinder you getting the loan, even though you've come so far into the process. From here, I think this is where the presentation would stop, or we'll take questions from anyone if you have questions out there. And I have some questions for you, Jay, but let's see what they have for you.
That
While they're thinking, I'll ask you a question. People ask all the time, Jay, why is renting better than buying? If I'm renting and I'm comfortable, what's the need to buy a house?
Oh, okay. Yeah. Um, I think simply you can think about it this way. Rent equals 100% expense.
That's right.
Rent equals 100% expense. That's your downside. I mean, you have a fixed cost. If something breaks, the landlord fixes it. But you have no control. If they tell you to get out or if they raise your rent, that's it. You know, you'll have to move if that's not the case. Owning a home or buying a home, even though you are using our mortgage companies, our bank's money, you still have ownership of this property. You're essentially just using our money to purchase an asset that goes up. Opposite of a car, by the way, if you buy a car, that asset typically loses value over time. So think of it just the exact opposite. When you make a payment, think of the principal and interest. Interest is coming to us, principal is going to you. Principal is your equity in your home. So you're
Okay.
building equity, forced equity every single month.
That's good. And I think I've seen where renters are not even allowed to paint their house a particular color. When you buy your home, it's yours. You can paint every room whatever color you decide to. Another question. Can one get a cosigner to qualify for a loan? When would you need one, and is it possible to get one?
Yep. Yeah. So if you want to purchase a home and you have a brother or sister that lives in a different state,
Mhm.
um, they can co-sign to help you qualify for a home. So I'll give you a good example. Why would you do that if you can't afford the home? Why would you put yourself and your relative at risk? I know a lot of people that have built-in tenants when they buy a home. We can't use that rental income to help you qualify. So like you've got a good friend, boyfriend, girlfriend, just somebody that's not going to be on the loan or doesn't have ownership with you that is
Mhm.
going to be part of be responsible for part of the expenses, either through a lease.
Mhm.
That would be a good example of why you'd want to do it. And most people don't realize not everybody on the loan has to be living in the home, so they can be living somewhere else.
Okay. All right. So if I want to buy a home, say for example, 500,000 and I only qualify for 300, I can get someone else to co-sign or add to the loan to help me qualify for a loan up to 500. Is that how it works?
That's correct. Yep.
Okay. So it's like
So
co-signing for a car basically.
yeah, yeah, think of it
Kind
that way.
of. Okay.
Yeah,
All
a lot of
right.
parents end up doing that for their kids.
Yes. A lot of parents and siblings and all. Okay. Um,
There is a question in chat if you want to ask me the next question and see what that one is.
I'm lucky to have a high-paying job, but I fear this means I won't qualify for most assistance. I'm also young, so haven't had a chance to build robust savings. Are there assistance programs specifically for young buyers? I worry a bit about the burden and risk of a mortgage at my age. Any tips or way to plan for this?
It's such a common question, so I'm glad you asked that question.
Mhm.
Um, I there are uh, several young people that are starting to move into the buying range. So I just had somebody who recently graduated from college, and she's only been out of college for 6 months. She did get some assistance from her mom for down payment. Um, but again, young, like you're saying, feel that responsibility of should I be buying a home? I would say age is not a big factor. I think stability is an important factor. So if you have a job where you feel like you're going to probably stay in one location for a longer period of time, I think at any age, that's an important time to consider buying a home. If you are, in transition or your job could take you anywhere, if you don't think you're going to be in the area for longer than 1 year, that might not be the best time for you to be buying. So I'm not equating young people with instability, but when I was younger, I moved around. I didn't have any responsibility, so I would go wherever the wind would blow me in what direction. So, um,
And they
getting
can
to,
use that as a stepping stone and rent it out if they need
yeah,
to move around versus
I,
waiting,
I was
right?
thinking that too. Yeah. So even
Yeah.
if you were concerned or you could rent it out to friends while you move somewhere else and you could come back into the area, you could sell it at a later time. But there's no program out there that says Generation Z down payment
But
assistance.
yeah.
There's not. So unfortunately, if you have higher income, you're somebody that we would either go through the process of seeing if there is a county discount. So sometimes if you buy in certain counties, you can get down payment assistance. Um,
um,
or you would just be somebody we would try to get into the lowest down payment assistance program out there. Because
okay.
higher income people typically are the best or the better buyers. And sometimes there's money that you didn't realize you've been saving in a 401k for 10 years or for 4 or 5 years at your job and you have 50,000 in there. And, you can borrow from that and take 20,000 out of your 401k tax free. So sometimes just talking through it and me asking enough questions, sometimes there's money that you didn't realize that you could use.
Another question in the chat. I hope that answers your question, Kalila. Another question in the chat is how do I determine what I can comfortably afford versus what I'm approved for?
Great question once again. The very first question that I ask in my interview process is, um, what are you comfortable with for a monthly payment? It's a starting point for us to have a discussion. And most times people answer that question by saying, well, my rent is 2,500, so I don't think I want to go higher than 2,500 or whatever that number is. So we start with that, and then I say, how much money do you have? Do you know what your credit scores are? Um, ask a little bit about your job. And usually I can back into a sales price would probably be around X. And then the next question would go to Emerica and say, this person wants to buy in Silver Spring, Maryland, and they can only afford up to 2,500 a month, and that's a 450 purchase price. Is there something out there in neighborhoods that this person would like to, be happy with? So we start with that. And then we'll come back once you apply and say, oh, by the way, you qualify for 3,000. And
Mhm.
and what happens is we typically approve you for more of a payment than what you feel like you're comfortable for.
Mhm.
And I would never say, well, then you should take the 3,000 because that's what we tell you that you're approved for.
No.
But think about it this way. A lot of people are at the very early stages of their career, and you may be at an entry level job where you're going to get 20 or $30,000 pay raises over the next few years. So your income is not always going to be where it is when you buy your first home. So I didn't think of that, and I wish people would have explained that to me. Like, okay, it's going to be okay because my income is going to go up over time. Or maybe you have a job where your income's not going to go up that much over time, 2 or 3%. And if that's the case, then I would probably stick to what makes you comfortable now. Because that 2 to 3% pay raises over time is just really going to cover inflation, cost of living.
Yeah. I always like to get people into homes they can afford, and then they grow as the years go by. Your first home is not your forever home. So yes, I would say get into a price point you're comfortable, and in the next couple of years, when your finances improve, we can move you to a bigger place, and you can either sell the existing home or you can rent it out. Um,
I see
Another
the,
question. Uh-huh, go ahead.
I was going to say that I see the question that's just short and easy. I read it.
Okay.
What's the least amount you should save to buy a home?
Yes.
I don't think there's any one answer to that, but I like to have somebody save at least $10,000
Mm-hmm.
because $10,000 tells me that they're probably not maxed out on their credit cards. They've been saving some money, and that's usually somewhere around what you're going to pay for closing cost.
Yeah. You're right, Jay. I'll say about that because even if you're gonna get any assistance, government assistance, or if you're gonna have any seller credits, you do need the initial EMD when you put your contract, which normally would be the first at least $5,000, if not $10,000, at least to show the sellers that you're serious about purchasing the home.
Yep. I would say the questions that you guys have asked,
Mm-hmm.
um, those are really good starting points. And if you just wanted to, I'm going to put my contact information in the chat,
Mm-hmm. Mm-hmm.
and we can have a 10 or 15-minute conversation. And I would just encourage you, since you're here now and listening to this, you're going to be a buyer at some point.
Mm-hmm.
If you just keep educating yourself and going through the process of asking enough questions. So I would say start with a 10-minute conversation with me. and we
Yeah.
can kind of get you on your path and have a strategy for you to help you at least put a timeline out there. So maybe it's going to be next year.
Yeah.
Maybe you're not in a position where you have 10, don't have 10,000 saved or whatever. You want to pay off some credit card debt. That's one thing we didn't talk about. You don't need to pay off all your credit card debt to buy a home.
No, you don't. Mm-mm. You don't. That's one of the myths out there. You don't have to pay all your credit cards off. You don't have to have a boatload of money saved up. And if your credit is a bit iffy, you can sit with Gio or myself. We can go over it with you and make sure we guide you towards what to do to help bring the credit scores up. And if you sit with me also, would have a one-on-one conversation. I can understand your timeline on when you want to buy a house. I can understand what your needs are and be able to guide you towards home ownership. Again, I want to apologize for the mix-up earlier that we got to start late. The code wasn't shared through Eventbrite, and thank you so much for being patient and going through this with us. Jay, anything else from you?
No, this was great.
No. Okay.
Thank you,
If
America.
anyone, if there's no more questions, we'll say thank you, and I'll share the recording and the slideshow with all of you. Thank you so much for joining us.
Have a good night.
Thank you. Good night.
Good
Good night.
night.